Reliance stock delivered almost 0% return in last 1 year. In fact, for the first time in a decade, the stock gave negative return. But why? What's happening behind the scenes? In this video, we are diving into all the parameters that make the Reliance Industries the powerhouse it is and exploring what might be holding it back. Is the recent dip a warning sign or a hidden opportunity? Stick around as we break it all down. Hey everyone, welcome back to our diligence stock analysis series. Whether you're an aspiring investor or just getting started, this series will help you in making your investment decision. We have already done an analysis of Reliance Power and the video link is here. Reliance Industries Limited is one of India's largest and most diversified conglomerates with businesses spanning across petrochemicals, refining, telecommunications, retail and digital services. Founded in 1966 by Dhirubhai Ambani and his brother, Reliance started as a textile company and now it is a powerhouse in almost many categories. Today, Reliance operates in over 50 countries and is considered as a leader in India's industrial sector. The company's diversified portfolio includes various businesses and is one of the largest in India. Even its retail business is also one of the largest in India. Reliance also has a strong foothold in the telecommunication industry through its subsidiary called Jio. With a market capitalization of over 20 lakh crores, it is the highest valued company in India. Let's dive into each four segments that makes Reliance Industries a dominant player in India and globally. Let's start with the retail business. Reliance Retail is one of India's largest retailer, operates an integrated network of stores and digital commerce platforms catering to diverse consumer needs across electronics, fashion, grocery, and connectivity consumption baskets. And if you look at the revenue contribution from this particular segment, it contributes nearly 23% of the overall revenues of the company. And the second vertical is O2C. O2C stands for Oil to Chemicals. The Oil to Chemicals business portfolio spans transportation fuels, polymers, elastomers, intermediates, and polyesters. The O2C business includes world-class assets comprising refineries and petrochemical units that are deeply and uniquely integrated across sites along with logistics and supply chain infrastructure. This is the major revenue contributing segment, contributes nearly 57% of their overall revenues. And the third vertical is oil and gas E&P. Reliance is a major player in the exploration production sector with an upstream portfolio that includes deep and ultra deep water oil and gas fields and coal bed methane blocks. And this segment contributes nearly 1% of the overall revenues. And the fourth vertical is digital services. Reliance is India's premier digital service provider, catering to over 480 million subscribers with the most extensive fixed mobile convergence platform and digital solution. Jio has completed its planned true 5G rollout across India. It is also accelerating the transformation of fixed broadband infrastructure in the country with its Jio Fiber and Jio Fiber solution. And the digital services segment contributes nearly 11% of their overall revenue. And the fifth vertical is media and entertainment. Reliance has taken big strides to scale up the media and entertainment business, especially in the last 1 year. From initiating the merger of TV18 and E18 with Network 18 to onboarding a strategic investor in Viacom 18 and to announcing partnership with Disney. And the last vertical is new energy business. Under this vertical, they're converting photon to green electrons and further to green molecules, leading to a reduction of carbon footprint. So these are the 6 main business verticals of the company. Now that we have spoken about different segments and their revenue contributions, now it is time for us to understand a bit about the industries in which they are operating in. Let's start with the retail industry now. India's retail industry is one of fastest growing and one of the largest industry in India. With the expanding urban population and the rising income levels and also more connected rural consumers, retail is booming. In 2023, retail industry contributed to nearly 10% of the overall GDP and it contributed nearly to 8% of the total employment. And the overall market size of this particular industry is around $911 billion and looking ahead, it is expected to reach nearly $2,000 billion in next 1 decade. And next, let's talk about oil industry. The oil sector faced a challenging year in FY23 to 2024 due to several issues like geopolitical tensions, energy transition and environmental concerns. Despite these hurdles, global oil demand rose to 102.4 million barrels per day while supply was slightly behind at 102.1 million barrels per day. OPEC played a key role in managing oil prices and Brent crude oil averaged at 83 per barrel. Refineries processed more crude and tanker markets saw growth due to shifting trade route. And the next industry that we'll discuss is renewables. We have also discussed this industry in greater detail in our previous EDG stock analysis videos. You can find the link here. India is quickly becoming a global leader in renewable energy segment and we are ranked as the third most attractive renewable energy market worldwide. And India has ambitious goals. By 2030, it aims to generate 50% of its electricity from non-fossil fuel sources and cut its GDP emission intensity by 45% compared to 2005 level. And the fourth industry which we'll discuss is about telecom industry. Telecom is the backbone of India's economy and playing a key role in the growth of country from the last 3 decades. As the second largest wireless market in the world, India had 1,165 million wireless subscribers as of March 2024. The industry added nearly 21.6 million subscribers in the last financial year, with overall density rising to 83.3%. While it is impressive, it still lags behind the global averages, so which indicates the headroom for growth. Now let's look into how Reliance is positioned in order to leverage the opportunities that is available for the company in various industries that it is operating in. So it is time for us to understand the strengths of the company. Let's start with the pillars of the Reliance. Reliance Industries stands strong on three pillars. We'll discuss each of them in detail now. First one is O2C business. Reliance is a global giant in O2C segment, producing high specific fuels, premium chemicals, and green materials. Its Jamnagar refinery complex, one of the world's largest, processes over 1.24 million barrels per day. And the second one is Reliance Retail. Reliance Retail is a powerhouse in India's retail landscape. From groceries to fashion to electronics, it is one of the largest and fastest growing retail chain in India. With over 18,000 stores and a robust online presence, the company boasts a registered customer base of nearly 300 million. Reliance Retail is also India's largest grocery retailer, offering a diverse portfolio of formats tailored to different consumer needs. Each format brings a unique value proposition, making it a one-stop shop for millions of households. And the third important business of the company is Reliance Jio. Reliance Jio dominates the Indian telecom sector with handling a data traffic of nearly 60%. With over 12 million Jio fiber subscribers and it is growing, Jio is revolutionizing connectivity across India. So these are the three main pillars of the Reliance. Now let's focus on the second strength of the company, which is the strong profit of the company. Reliance achieved a record-breaking profit of nearly 79,000 crores in FY24. It stood at 73,000 crores in FY23. Reliance hefty profits are a major strength of the company because it will give the company an extra advantage to reinvest in the company business and also in order to enter into a new opportunities wherever there is available. Strong profits also enable Reliance to manage debt, reward shareholders, and maintain a competitive edge in diverse industries, ensuring long-term sustainability and expansion. And the third strength of the company is, which is very important, strong expansion and investment plans. With its dominance in various sectors and also with its strong profits, Reliance has the ability to enter into new industries and also tap on the opportunities on time. It is investing aggressively to new initiatives, further strengthening its position as a global conglomerate. Reliance is making significant strides in the renewable energy sector, aiming to transform India's energy landscape and achieve net zero carbon emissions by 2035. There are several initiatives Reliance Industries has taken up in order to make this happen. First one is Dhirubhai Ambani Green Energy Giga Complex, which is located in Jamnagar, Gujarat. This 5,000-acre facility will house 5 gigafactories dedicated to solar photovoltaic panels, energy systems, electrolyzers, fuel cells, and power electronics. And when it comes to strategic investments within the expansion plans, Reliance has completed over 75,000 crores to develop a comprehensive renewable energy ecosystem in India. The company secured a bid under PLS scheme to develop and to produce 10 gigawatts of advanced chemistry cells essential for electric vehicle batteries. In the retail sector, Reliance Retail has opened up nearly 464 new stores and bringing the total count to 8,946 in the last quarter. And now let's move to the first strength of the company, which is the increase in ARPU in the telecom business. ARPU refers to average revenue per user, and it was increased to 195.1 per subscriber per month in Q2 FY25 versus 181.7 per subscriber per month in Q1 FY25. Although the recent hikes has led to some kind of SIM consolidation and high churn rate, the management expects that the full impact will be seen in the next 2 to 3 quarters. Despite phenomenal performance, Reliance Industries do possess some kind of risks. So now let's talk about the risks of the company. First risk is high debt and huge interest payments. If you look at the interest payments of the Reliance Industries, they have skyrocketed from nearly 3,849 crore in FY17 to nearly 23,118 crore in FY24. So this growth indicates substantial borrowing linked to its new initiatives, which is related to the investments in telecom, new energy, and other businesses as well. While these investments are critical for long-term growth, it will impact the financials in a very bad manner if it keeps on increasing from now. Wherever a company is paying huge interest, it will impact on the profitability of the company, which may reduce the net income available for the reinvestment in the business and for the expansion plan. And Reliance Industries, led by Mukesh Ambani, is in talks with 6 banks to secure a $3 billion loan to refinance $2.9 billion debt due in 2025. The loan is expected to be syndicated by 2025, making Reliance return to international borrowing since 2023. Previously, the company raised around $8 billion, drawing interest from 55 lenders, including deals involving Reliance Jio. And the second risk of the company is exposure to project risk. RGHCCL's project is at a nascent stage, is exposed to stabilization and implementation risks. The company recently tied up a non-fund based bank limit of 120 crore primarily for submission of performance bank guarantee to government agencies for its performance obligation under site program. Now that we have discussed about the strengths of the company and also risk of the company, it's time for us to understand an important point. Why has Reliance stock has delivered negative returns for the first time in a decade, and what key factors have contributed to the unprecedented downturn? Reliance Industries is facing several challenges and that are impacting its performance. In the oil, gas and petrochemical segments, global headwinds and fluctuating crude oil prices are creating margin pressures. Certainly, despite the growing ARPU in the telecom business, the ARPU is facing slower than expected growth compared to the industry benchmark. In the retail sector, ongoing restructuring and consolidation efforts are delaying opportunities to unlock shareholder value. Additionally, Reliance has invested huge amounts in its new energy business, which is taking a lot of time to commence its operation. So the delay in operationalizing these projects and underperforming cash flows have forced the company to take on additional debt, adding to its financial burden. So what do you think? Will Reliance bounce back from this shock soon? Let us know in the comment section. Moving on, let's focus on the financials of the company. Over the years, Reliance Industries has demonstrated consistent growth in its financial performance. Sales have seen a steady upward trajectory, jumping from 3 lakh crores in FY17 to almost 8,99,000 crores in FY24. And even the expenses have risen, reflecting the costs associated with growth. But the OPM, which is operating margins, has remained stable, improving from 15% in FY17 to a robust 18% in FY24. And when it comes to the other income, it peaked in FY21 at 22,000 crores, contributing to resilience during challenging period. The net profit has also displayed remarkable growth, nearly tripling from 29,000 crores in FY17 to over 79,000 crores in FY24. This performance underscores Reliance's ability to scale while maintaining profitability and operational excellence. Now let's also look into the shareholding pattern of the company. Reliance Industries shareholding shows a strong and stable pattern. Promoters holding has steadily increased from 46.32% FY17 to over 50% since FY20, reflecting their confidence in their business. DAS have also significantly grown their stake from 11% to 16.98% in FY24, while FIIs maintained strong participation despite a slight dip from their peak at 25.66% in FY21, while public shareholding has decreased from 19.12% in FY17 to 10% in FY24. So this is all about the shareholding pattern of the company. Now let's focus on the growth triggers of the company. First one is fully integrated renewable energy ecosystem. Reliance is making significant strides in the renewable energy segment. One of the most significant developments in the particular segment is the development of Dhirubhai Ambani Green Energy Giga Complex in Jamnagar. This facility is quickly becoming one of the largest and also largest integrated renewable energy manufacturing hubs in the world. And it is not just a game changer for Reliance, but is also for the India's energy vision. This project is a key piece of Reliance's plan to take over the renewable energy space and lead the country toward a more sustainable future. And the second growth trigger of the company is government push for green hydrogen. On top of this, industry got some major support from the government of India. In January 2023, the Union Cabinet approved the National Green Hydrogen Mission with a huge 19,744 crore investment for the next few years. So this mission aims to make India as a global leader in the green hydrogen by 2030 with a production of nearly 5 million metric tons per year. So Reliance is positioned well in order to grab on the opportunities in this particular segment. And the third growth trigger of the company is the development of new energy business. Now after dominating telecom, retail and other segments, Reliance is focusing on the new energy business and is set to be the next big growth trigger of the company. Reliance has already laid out a nearly huge investment of 75,000 crores in order to build a 10 gigawatts capacity project. Not only that, the company has also made several acquisitions in order to become one of the biggest player in the new energy business and also renewable energy segment. So these are the few growth triggers of the company. And now it is time for us to focus on the ESG section. But why do we need to focus on the ESG section? Because this section will tell us how good the management is and what are they contributing to the society and what are the key measures that they are taking in order to protect the environment. So we'll focus on all these parameters in this particular section. So let's start with environmental section now. Reliance has made significant strides in the environmental initiatives such as commissioning of its first commercial scale CBG plant in just 10 months and earning a ACDP rating for Reliance Jio Infocom Limited. With its ambitious net carbon zero by 2035, Reliance is stepping up its efforts on a global scale. To reach this target, the company plans to establish 100 gigawatt of renewable energy by 2030 and also build gigafactories for an integrated renewable energy ecosystem. Despite facing environmental challenges such as the 2014 regulatory issues at their Jamnagar refinery for pollution violations, Reliance continues to address these concerns while driving towards sustainable future. And now let's move on to the social section. Reliance Industries aimed at transforming the rural communities by Rural Transformation Program of Reliance Foundation continued to evolve through FY23 to 2024. During this particular year, with the help of this program, nearly 2.6 million plus people were benefited from these initiatives. During FY23 to 24, Reliance has contributed nearly 1,592 crore for the CSR activities. And with the implementation of these CSR activities, nearly 84,000 plus women have empowered through digital literacy skills. And interestingly, Reliance Foundation founder and chairperson Neeta Ambani was awarded the Citizen of Mumbai Award 2023-2024 by the Rotary Club of Bombay for her contributions to healthcare, education, sports, arts and culture. And the last section of the ESG, which is governance. The gas migration case between the Reliance Industries and the ONGC gas revolved around allegations that Reliance Industries extracted natural gas from ONGC blocks in the Krishna River due to natural gas migration. In 2015, ONGC accused Reliance of siphoning gas from its block, with a US-based consultant confirming the occurrence of gas migration. The Minister of Petroleum and Natural Gas intervened, directing Reliance to compensate for the extracted gas. Reliance, however, denied any wrongdoing, asserting the gas migration is a natural phenomenon and that it operated within the boundaries of its block. Ultimately, Reliance paid a 1700 crore as compensation while maintaining it had followed all regulations. So that's all about the governance section. And now it is time for us to focus on the conclusion. In conclusion, Reliance Industries continues to generate profits with its vertical performing exceptionally well. Moreover, as highlighted by the company in its annual report, AGMs, and even on the con call reports, the new energy business, once fully operational, will be a game changer for the Reliance Industries. The timely commencement of these operations is very important for the company's future. Additionally, Jio's continued growth and innovation are expected to play a key role in the company's growth. While the company's future appears to be promising, it is essential for the investor to do the due diligence before investing in this particular company. So before making an investment decision, make sure it is aligning with your financial goals, and also please do your own research before investing in this particular company. Thank you for watching the video. Stay tuned for our next video. Till then, take care. Bye.